So the Magellan Infrastructure Fund has been set up to invest in listed infrastructure securities. So what's listed infrastructure? Well, there are two things that we look for when we define an asset as infrastructure. The first is that the asset provides a service that is essential to a community: electricity, water, travel via road, things that you really can't do without. As a result, the revenue that's generated by that service is inherently reliable over a long period of time. The second thing that we're looking for is that the asset faces no undue risks. It doesn't place any pressure on its cash flow margins. So that means we don't want to have any commodity price risk, we don't want to have any competition risk, we don't want to have any technology risk or any sovereign risk. So the net result of all that is you have an asset that generates an inherently reliable revenue stream and an inherently reliable cash flow series over the long term. So what are the sorts of assets that generate those sorts of characteristics? Well, there's utilities, there's infrastructure, and there's social infrastructure. Utilities are energy, utilities providing electricity and gas to the typical household. They're water utilities. Infrastructure is toll roads, it's ports and it's airports. And social infrastructure are things like prisons, schools, law courts. Social infrastructure is a very small part of the overall universe for us. It's probably 1% at the moment, whereas the broader part of the universe is utilities and infrastructure. And in fact, utilities is about, as we measure it, about 3/4 of our universe. The total investable universe is about $1 trillion, and there are about 200 or so securities that we can invest in. Our portfolio has significant weighting to three sectors. Firstly, it has 38% of the portfolio is invested in toll roads, the majority of which is in urban toll roads rather than inter-urban roads. Urban roads sit in a single urban area, whereas inter-urban roads connect two or more urban areas. The toll roads in Australia are typically urban toll roads. So 38% into toll roads, 15% into airports and ports, and 35% into utilities. The remainder of the portfolio is invested across a range of miscellaneous sectors, but the three major weightings are utilities 35%, toll roads 38%, and airports 15%. In the most recent quarter, the performance of the different segments of infrastructure has been, broadly speaking, very similar. As the chart shows, you see the lines over which indicate how the share prices of the different sectors have performed. They're broadly speaking, they're quite close together. The one standout across the 3 months has been airports. You can see the red line in the chart rising a touch there, and so it's performed a little bit more strongly over the last 3 months. That's happened as passenger numbers have come back to airports, as you'd expect, in a gradual signs of economic recovery. Now, if we go to a more broader perspective, if we look at the second chart, we see that airports and toll roads have performed more strongly over the last 12 months. You see, again, the airports line, the red line, rising over the course of that 12 months, and the next line, the pink line, which is toll roads, similarly rising over the course of those 12 months. Utilities have performed broadly in line with what we'd expect over both 3 months and 12 months, and that is they've been stable. That's what you expect out of a regulated entity, which most utilities are. So what's been driving airport performance and toll road performance over that time? Well, let's deal with airports first. There are three trends that underlie strong airport performance over both the long term and the medium term, and they are rising income per capita, or reductions in average airfares, and reductions in regulation. Those three things have underpinned an increase in airport passengers really over the last 40 or 50 years. And that's something that we see as continuing to underpin further growth in passenger numbers over the long term. Now clearly in most recent years, as we've had more dire economic circumstances, we've had some declines in underlying passenger numbers. But in the most recent quarters, we're starting to see those things rebound. So if I look at two of the major airport investments that the fund has made, Auckland International Airport and Zurich Airport, well, in the case of Auckland, Auckland had a reduction in passengers in its last financial year. The year ended 30 June 2009. But in the 9 months to the end of March 2010, we've seen a 3.3% growth in underlying passengers. Similarly, at Zurich Airport, we saw a reduction in passengers in the calendar year 2009, but in the most recent quarter, we've seen an 8.4% increase in passenger numbers. Given that your revenues at an airport are a function of both passenger growth plus inflation, plus potentially real growth in the amount of money that passengers are spending in an airport, that 8.4% growth at Zurich and the 3.3% growth at Auckland augurs well for both revenue and earnings, certainly in the short term, and gives you a taste of what we think is potentially possible over the longer term. Now let me move to toll roads. As I've mentioned before, toll roads, there are two fundamental types of toll roads, urban toll roads and inter-urban toll roads. We've invested in both types. The three major investments for the fund in the toll road space are Atlantia, an Italian inter-urban toll road system, Intoll, whose major asset is the 407 toll road, an urban road in Toronto, Canada, and finally Transurban, which owns a collection of urban roads in Australia. If I look at Atlantia, Atlantia has grown its earnings consistently over the last 10 years, measured at the EBITDA line. In most recent years, it's suffered a decline in passenger numbers. But again, in the first quarter of this year, 2010, we've seen an increase in passengers to the tune of 1.8%. If I look then at the 407 toll road, the 407, the major asset of Intoll, 407 has grown earnings consistently over the last 10 years through both an increase in traffic and an increase in the underlying toll rate. Again, in 2009 it suffered a decline in underlying traffic. But in 2010, in the first quarter of 2010, we've seen an 11.7% growth in revenue. Again, auguring well for what we see out of earnings growth in this asset going forward. And finally, Transurban. Transurban owns, as I said, a collection of urban roads. Its two major roads are the M2 toll road in Sydney and the CityLink toll road in Melbourne. Transurban is unusual, or is a very strong, robust asset, and it has actually been able to grow revenue consistently over the last 3 years at these two major roads. In fact, every quarter it's posted revenue growth. But again, in the most recent quarter, the quarter ended 31 March 2010, we've seen something like 15% revenue growth on the M2, 11.7% growth on the CityLink. Very strong performance for a material asset for the fund.